You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-exciting Options Insider Radio Network. And if you haven't had a chance to check out all of the latest additions to that network, including Trading Tech Talk, I recommend you do so. Wherever you find the Option Block program, you can, of course, find all of our fine programs here on the network. And while you're doing that, make sure you download our brand spanking new Options Insider Radio Network mobile app, which, of course, is available for iOS and Android and even Amazon Kindle Fire. So no matter what you're rocking out there, we have a version for you. You can instantly stream all of your favorite episodes of the Option Block, as well as, of course, all of the great content we recorded last week at the big Options Industry Conference. A lot of great stuff there. All that stuff available, instantly streaming. You can download it to your handset for offline listening on the plane or the train. You can even hit that question, hit that email, hit that feedback button, and send your comments, your questions, your feedback directly to the hosts of your favorite programs. So if you want to hear your voice on one of your favorite shows, you know how to do it. Hit that feedback button. A lot of great ways for you guys to get in touch with us. Check it out, the Options Insider Radio Network mobile app. I think you're going to like it. All right, as I mentioned, I am back from the big Options Industry Conference. A lot of fun stuff going on down there. Maybe we'll hit on some of that in the old show today, but before we do that, let me introduce the rest of my cohorts on the old all-star panel today, starting off with my co-hosts from last week. Let's start off with the man beaming in from scenic and lovely St. Charles, good old Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, thanks for diving into the big chair for me last week.
Oh, well, I shared it actually with Andrew, but it's a big enough chair because your shoes are so big, or, well, I guess if it's a chair, I guess maybe your butt's too big, so this isn't coming out as I had hoped, but nonetheless, we got it done.
Thank you for very much that backhanded compliment. All right, and Mr. Andrew, thank you to you as well for the two of you sharing the big hosting chair last week.
Mike was on one arm of the chair, I was on the other arm of the chair, and somehow we managed to get the hosting done. It was quite a lovely little show with the market kind of spittering around last week. So, but we're glad you're back safe and sound from yet another sunny climate in the middle of winter. The job that is Mark Long.
Before you get too envious, we were in Austin in name only. We were really in a resort in the middle of nowhere, 30 miles outside of Austin, so you had to schlep 45 minutes each way if you actually wanted to go down to Austin. So don't be too envious of me just yet. And I get to spend these events pretty much in my recording studio for 3 days, so I don't really see wherever we are, whatever the venue may be. I might as well be in Nome, Alaska, or Duluth for all I see. But still, interesting stuff nonetheless. It is indeed a difficult life. And watch out for that chair when you're sitting on the arms and indeed in the middle, because we've set it up kind of like the Game of Thrones chair. We don't want our hosts to get too comfortable. So a lot of spikes and things pointing up at you. So be careful where you sit when you're sitting in that.
Extricating myself was a bit of a trick, I actually have to say.
All right, and last but certainly not least, beaming in from the heart of OX by Charles Schwab, none other than the Viceroy himself, Mr. Alex Jacobson. Alex, welcome back to the program, sir.
Mark, it's good to be here, and I know everybody thinks you're kidding, but I remember when I was at the conferences when you were recording and you had a little meeting room and a big table of technology. There were some days I doubt you saw the light of day till the conference ended that evening. You're a very busy man at those events.
Yeah, people don't really understand. I've had a few people come in, including your buddy there, Andrew, Mr. Dan Passarelli, offering to do some shows with me down at these conferences, and they burn out after a few hours. They don't get the full schedule of the whole day's worth of recording for days upon days upon days. They tend to burn out pretty quick and head to the pool. So it is indeed very much a working trip for us here, keeping the Options Insider machine rolling. And we're going to keep on rolling right now, right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, and welcome to the Trading Block. This is, of course, the portion of the show where we break down what was trading, what was moving, what was lighting up the old tape today from an options as well as from a broad market perspective. And looking at the broad indices, not a whole heck of a lot going on today. Q's getting a bit of a boost, but not much else really. The S&P and the Dow closing up fractionally on the day, but not a whole heck of a lot other than that. VIX cash also catching a bid, up about 0.3 of a point to 13.21 on the day. Other than that, not really a whole heck of a lot going on. Still a lot of earnings on the horizon. We can touch on a few of those later. But aside from that, Uncle Mike, perhaps we'll start with you. What caught your eye in today's activity? Your beloved Apple catching yet another bid today, closing above that 600 handle. I know you love those technical levels. Rallying nearly about 8.5 handles, or about 1.5% to close at about 601 on the day. So I'm imagining that, or I'm guessing I should say, that took up the bulk of the BBI today.
For sure. That's one where it wasn't a lot of action in other places, and the BBI itself was not really, there wasn't a lot of action today, but what we ended up doing with Apple, we initiated a risk reversal, a ratio style risk reversal a little over a week ago, where we sold a 570, 560 put spread, 10 lot, got about $1 in credit, so $1,000, and we used the money to buy a June 610 call for $10.30. So all in all, it was a cost of $30 per the amount of units with which we did, and closed out the put spread today for, I believe it was 12 cents. And so now we're just going to see what can happen with this 610 call and possibly let it ride. So for the time being, I was concerned that Apple may or may not get over the 600 mark, but my concerns were alleviated about 20 minutes ago. So now the next concern is, can it stay over the 600 mark?
But that's the lovely thing about nice bullish risk reversals, is that you're in for so few dollars, so few pennies there, that your skin on that 610 strike pretty low.
It is, and the benefit of it is that if you do it from a diagonal standpoint like we did, you sweat major bullets for a few days or weeks, depending on the time frame with which you place the trade. But once it's done, my cost basis on this call option right now is like $125 per contract. So theoretically, I know, granted, we had to take on that risk of the 10 lot for about 4 or 5 days, but nonetheless, at this point, it's kind of a relaxing trade, and now we'll look to start doing something else with that and continue to hedge the big position, which is the long stock position. But as a way of building in more exposure to Apple, I think that was we're pretty excited about what happened with it, and now all it needs to do is go up.
Well, as the last couple of weeks proves, Uncle Mike, it can do naught but that, right? So pretty good times to be bullish Apple yet again. And just to clarify for our listeners too, like you mentioned, this is indeed in addition to the stocks. This isn't your only play in Apple. You have the stock and you're adding on a nice bullish risk reversal to add a little bit extra flavor to the old stock position, a kicker, if you will.
Absolutely. So just if you financed by the sweat of Uncle Mike, basically.
Gamma for free, but it's not free. It's never free.
Well, sometimes the sweat works out. Sometimes it doesn't. This time it has so far.
Nothing a few Tums won't fix there, Uncle Mike.
Yeah, that'll work.
Perhaps a nice aggressive therapist. Hopefully it doesn't bill by the hour.
Well, it worked this time, so now I can finance the therapy and the Tums and all the medications with which I'll need.
There we go. I like it. All right, and Mr. Andrew, what consumed your day, your Monday here? People always ask for the date. I always forget. We are recording Monday, May 5th, so bear that in mind if you're playing along on the old home game. Mr. Andrew, what caught your eye in today's activity?
We had a little key bounce. I thought there was some kind of elevated front month also. We looked at time spreads and some double calendars and stuff like that. VIX volatility is 13 has kind of been the line in the sand for vol. It's bounced off the 13 handle pretty consistently this year. It doesn't look like it's going to stop doing that. The only other thing that was kind of in passing, just trying to look at this situation a little bit and see if that's going to, if it gets better or worse. If I just look at their equity market, it's up 9 whole cents today, the RSX. So it's kind of been hanging out. Not a lot going on, and I have a feeling this is going to be a movie here for a while until we have, another catalyst really to take stocks higher, some good news or, a deterioration somewhere else. But we can kind of sit around like this for a bit, I think.
Mr. Viceroy, please save us. What caught your eye in today's activity over there at OX by Charles Schwab?
It's a screw. But a couple things going on today. We saw a mass exodus from the banking stocks today. I guess the JP Morgan warning, customers kind of took it to heart, and we're selling the big banks with both hands today. The other thing to kind of echo Andrew's point is big drop in volume in both the SPX and the VIX today. Our volume numbers were probably half the average daily of last week. We started to see a little of that on Friday, but it just seems a lot of people are sitting on their hands throughout all this, and that shows up in especially in the SPX volume. VIX volume here, some days spikes, some days drops, but today was a particularly quiet day in both of those.
Interesting stuff. VIX is so hot these days. Any day that it isn't is almost a news story in and of itself. It seems like just about every day I have a release from the CBOE in my inbox saying new record VIX futures, new record VIX options, et cetera, et cetera. So the day that it isn't a new record is in and of itself a bit of a record these days. So interesting stuff. We'll check in with you a little bit later, Mr. Viceroy, for some more updates, some of the cool stuff you guys have coming down the pike over there at Options Express. But for now, it's time to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Welcome to the Odd Block. This is, of course, the portion of the show where we break down the weird, the interesting, sometimes it is downright bizarre activity that's lighting up the old street. We call it the Odd Block for a reason. We're going to kick things off. And I'm trying to think if we've ever profiled this name on the old Odd Block before. I don't think we have, Andrew. Perhaps correct me if I am wrong. We are talking here about the shoe/sneaker/ all sorts of sports apparel and equipment manufacturer known otherwise as the Swoosh, aka Nike. Ticker symbol NKE, closing today about 73 and a quarter, up about 30 cents or so on the day. This is the name that does fairly decent volume for an odd block candidate, doing about 12 to 13,000 contracts a day on average, and lighting it up with nearly 20,000, about 19,000 contracts or so on the day today. And what we saw in particular that caught our eye out here in good old swoosh land was some pretty heavy activity on the June 75s to the tune of, well, when we profiled it this morning on the site, we profiled about 2,340 of these June 75s going up. Looks like opening purchases for about 87 cents. The volume continued to go up. We saw additional blocks. That first one I should mention was all in one block. We saw a bunch more going up throughout the day. Buyers continued to come in. At the end of the day, we saw a little over 10,000 and change going up on this strike. They went out the day, 97 cents at $1, so bid up. Obviously, the stock rallied a little bit too. So all that buying combined with the stock helped to bid those calls up. Only about 1,500 contracts open on the strike, so clearly this is all opening paper. Interesting stuff. If we look here at the chart of Nike, there may be some earnings lurking in these options as well. We'll have to wait and see because the day is not announced yet. Senior Andrew, what is your take on this upside call frenzy in the swoosh?
The behemoth of Nike, very just bullish paper. There's no kind of way around it. Somebody wants to own these things. So Nike's kind of been on an earnings slide over the last couple years to some degree. It smells kind of like a newsletter buy. I mean, the vol was real cheap. There's a lot of leverage on, you have a $75 number for, about a month and a half. The options are just not very expensive, kind of bang for your buck if Nike gets moving. So it just looked like it's just a cheap way to get long and probably a newsletter type thing. But the first block actually traded 2 cents through the offer when they went up. And they were right. So we'll see, keep an eye on it. But clearly they're looking for, 76, 77, a pretty decent move out of Nike.
Yeah, that was my first take when I saw this write-up as well. This has all the hallmarks of a newsletter buy, a big block going up front to front run all the lemmings coming in afterward, and then sure enough, a trickle throughout the rest of the day that goes up to the tune of 3, 4, or even 5x what that initial chunk was. So seems like a newsletter. Seems like someone out there is repping Nike pretty hard. We'll see how this plays out in the coming weeks. We'll see when their earnings are announced and how this fares with that cycle. But interesting stuff nonetheless. Hard to believe we haven't had Nike in the old odd block before. I guess they're just too staid to be in the odd block on a regular basis. Too boring. They're getting out of the fitness band business now. What's left for Nike? It's just a boring old company.
Oh, they're getting out of the fitness band business?
Yeah,
they can't make it up with the fitness bands?
No money. Either that or the rumor is going back to Uncle Mike territory that they're partnering with Apple on the upcoming iWatch, which will have all that technology in it. So why build it yourself when Apple is going to build it?
Well, hence the 600 handle. Well, you know how lame that Android watch is. I wonder if Apple's actually just going to come in and just school everybody with all their coolness. Well, that'll be interesting to see.
That's been the rumor for several years now. I mean, everyone obviously jumping in ahead of them. Multiple iterations from Samsung with their Gear. We saw the Pebble, which is the big one, still the big hit, kind of from a left field company out of Kickstarter. They raised $10+ million on Kickstarter, the biggest that they had done ever to date there. So clearly there's demand for this kind of thing. You're right, but no one really has hit it out of the park yet. I would love to get one of them if I actually liked one of them. There's still the big main Google ones coming out and others. There's many more smart wearables to come this year, so we'll see how that plays in. But you're right, interesting stuff. I would wager pretty heavily that whatever the Apple smartwatch announcement ends up being, that Nike is involved in some way, shape, or form, because they've partnered in the past on that kind of thing. All right, moving on to a name that has appeared in the odd block before because it's biotech. And so when they're biotech, chances are they're going to be in the odd block at least once in a while. This is Gilead Sciences, Inc., ticker symbol GILD, G-I-L-D, closing today, $79.83, up about 3%, up nearly a little over $2 actually on the day. And this is the name that, from an options perspective of late, has been pretty heavy. has been about 61,000 contracts a day. Of course, there's some other earnings and other developments mixed in there that helps propel that volume a little bit. Doing a little bit shy of that, about nearly 60,000 contracts today. So pretty heavy from an odd block perspective. And what we chose to zero in on here was yet again an upside strike in June. In particular, this was the June 85s going up to the tune of about 6,700 contracts. They were mostly sellers. This went up in one block actually too, which is a little bit different from the last trade we just profiled. They traded through the bid at the time, so again, a flip of the script of the last trade where they lifted the offer. Now they're trading through the bid to get done. It looks like it could be an overwrite here. Again, though, there are about 6,000 contracts open on this strike. Again, doesn't mean a whole heck of a lot when the name is as active as this one. That could be just a mere coincidence, but it does raise a few hairs on the old back of the neck. Senior Rock Lobster, what's your take here on this call overwrite or apparent overwrite here in GILD?
Yeah, I think they're trying to just sell the 52-week high. There was, I think, just enough contracts on this block that was over the open interest. So I don't think obviously it was just closing the block. Somebody just wants to continue to be long, wants to continue to be long this, and they'll take their $1.32 and stay long the underlying. So I feel that's what usually when you see these big blocks go up like that, that's what it is. So, they're kind of a vanilla buy right trade, but I mean, Gilead's been a pretty good stock for the last, I don't know. Well, I guess find a stock that really hasn't been that good over the last few years. But consistent, 7 to 10% a year plus performer. So writing these calls, seems to make a little sense.
Moving on to, I'm trying to think if we had this one on the show before. I think if we have, it's been quite a while. We usually talk about TLT on the show, but not this one. This is the iShares Barclays 7 to 10 year Treasury Bond Fund, ticker symbol IEF, closing 102.5, pretty much unched on the day. This is a name that does, a whopping 600 contracts a day, doing 10,000 today, and pretty much all of that paper, shy of a few contracts here or there, came in one pretty sizable, looks like a roll on the put side, but perhaps not the way you may have expected. We saw the 100-102 roll going up in June for about 5,000 times for about 60 cents. Yeah, about 60 cents here. Open interest on the pars is about 7,000 contracts. Pretty much no open interest on the 102. So this has all the hallmarks of a roll up, a closing roll on the pars and rolling up to the 102s. Went up in 500 lot blocks, so that's interesting in and of itself from the structure. Interesting stuff, though. We see a lot of down and out rolls on this show. That's pretty much a lot of what we talk about here on the odd block. If it isn't an upside call buy, chances are it's a down and out roll somewhere on the call side and the put side. We don't see a lot of upward rolls on the put side, so that in and of itself is kind of interesting. Again, we have to watch the open interest, so you guys playing the home game can watch that as well tomorrow and see what you think here, what's going up with the open interest numbers. But it looks like, at least on the surface, apparently a closing out and up roll here in IEF. Senior Rock Lobster, is that your take as well, sir?
Pretty much. I think they're trying to, I don't know if they're holding on to the IEF, and maybe this is a protective type trade. It just feels like they kind of want to get short it with this type of trade. I mean, the way this thing moves, if it moves to 101, that's a huge move over, 30 days. So I think they're just trying to load their guns and waiting for, bonds to break. But as we've been talking about on the show for a while, I think everybody's got the same type of trade on. So everybody's watching the same movie with rates. Yeah, I think the par puts just sort of died, and they just tried to get what they could for them before they totally died away. So, but yeah, a strange kind of rolling up. It's like it's the no fun roll. Like Tusa has the rolls where he rolls up and makes money, and these guys are just kind of like trying to pick a top again, I guess. So it certainly could work out, but you in a underlying where the realized volatility is 2%, you got to be pretty right on direction for this to pay you any money. So
I'm trying
they
to
got a month.
That's the thing. They kept it all in the same expiration month too. I'm trying to think. I can't think of any other times I can think of actually on this show that we've profiled someone closing and rolling up a put spread like this.
In the same month.
Yeah, in the same month. First time that I could think of. So maybe this is a new record, a new milestone, a new benchmark here for us, Andrew, in the annals of somewhat weird activity.
I think this is not quite the love your broker trade category, but the broker's not hating this guy for sure.
Broker's not hating it, and I think the client might be hating it. You're right. It's probably the no fun roll is a good way to describe a lot of the content we discuss here on the Odd Block today. A lot of people doing things they probably wish they didn't have to do. All right. That may fall into this category as well, though I don't think so. We're going to wrap things up here with NQ Mobile Inc. This is ticker symbol NQ. They closed today $11.70, down about 30 cents or about 2.5% on the day. This is the name that does about 20-odd thousand contracts a day, so fairly heavy from an odd block perspective, doing over 2x, doing about 52,000 today. And again, the lion's share of that volume going up actually in two trades. We're going to profile one, but maybe we'll touch on the other a little bit later. This was the May 6 puts going up for a dime, a total of nearly just shy of 30,000 contracts, 29,720 of them to be precise, going up for a dime. And it seemed like they went out bid for more. They went out bid for a dime. This guy getting as many as he could. He kept peppering in that bid for a dime, bid for a dime, bid for a dime, kept getting fill piecemeal throughout the day. There are 77,000 of these things open on this strike. So this seems like someone taking his money and going home. I'm thinking this guy's pretty happy. Looks like he had a pretty decent sale here on these May 6 puts, and now he's taking it off the table. Again, we'll check tomorrow on the open interest to make sure, but I'd be very, very surprised if that is not the case. Adding a little bit of interesting fuel to the fire, we also saw the June 6 puts going up today for about 11,000 contracts on open interest of 17,000. I don't have the prices on that or the direction either, but I'd have to wager that could perhaps be related. Senior Rock Lobster, take us home. What's your take here on all this put buying and put rolling maybe out here in NQ Mobile?
Yeah, it looks like we've got, I think there's just a closing put trader. This NQ was quite a story for a while. The stock was moving like 400 volatility or something. It was a nut stock in the fall. And I keep an eye on it because it's, it moves. But I just think because it's a hard to borrow and you can make a lot of hay selling these out of the money puts. For a while, they thought the whole thing was a sham. I guess they have a couple 100 million customers, so maybe it's not. But it looks like somebody's making some money selling these 6-level puts, and they're just closing them. So as I recall, I had clients actually doing the same thing when the stock was trading, I don't know, like $8. You can sell a 6-level put out here for like $1, and they were pretty much. Actually, some of them were even from China, and they were like, well, it's a real company. So they were good ways. They were very good trades. So it's just selling puts in a hard to borrow. And sometimes the hard to borrows are, the shorts are wrong. So you get some money for selling puts. So looks like, at least for right now, that's what the case is with this one.
Indeed. Sometimes it's hard to argue against closing out the puts when they go in your favor, like we have said many times here on the old program. Take a lesson from our friend. If you're someone out there who hems and haws about paying a nickel for a put that went your way, this guy is looking to buy back 77,000 of them for a dime. So if he can do it, you can do it on your 10 lot too. A little bit of a lesson here to close out the old odd block. And now we're going to keep on rolling right on into Alex's favorite part of the show, because this time he gets to put on his fanciest of fancy hats, because it is time for the Xpress Block.
The Xpress Block. Brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is, of course, the portion of the program where Mr. Alex takes his hat and takes us on a tour behind the scenes into the land known as Options Express by Charles Schwab. Now, Alex, I know in the past you've given us some hints, some teases of some cool functionality coming down the pike from you guys over there at OX. I know you guys have been working quite a bit feverishly behind the scenes on a lot of new updates to the mobile and indeed to everyone's favorite new product from you guys, I should say new tool, which is the walk limit. So go ahead, sir, tease away on some of the stuff you guys have coming down the pike.
For later this month, the target is the end of May, and I'll caution kind of when I say that could easily become the beginning of June, but we're targeting a couple of enhancements to OX Mobile. Walk limit for spreads is available on mobile, has been available on mobile for a long time, but anyone who uses walk limit, whether it's on the mobile platform or the pure internet platform, has always asked the same question, and we've talked a little bit about it for the regular platform. When will I have single leg on walk limit? Single leg for mobile is slotted to be in that late May enhancement. So that's very exciting because walk limit continues to be an exclusive OX product. And candidly, it's been a big success and drives a lot of business here. We have folks who open accounts just to get access to walk limit. Two other enhancements that will be in that release. OCO and OTO orders on the mobile platform. One cancels other, one triggers other. So the two, probably the I don't want to call them the most sophisticated contingent orders, but clearly if you're an active trader, if you're a savvy trader, OCO and OTO is part of your repertoire. Both of those are slotted to come to mobile in that same update, which should be late May. And if not late May, it'll be early June. As we have talked about in previous shows, a kind of low-powered version of Idea Hub is also coming to Schwab Mobile, and that's kind of slotted for about the same time, the May-June time period. So a couple of interesting updates. If you're an OX customer and you haven't used walk limit, I'd encourage you to either attend one of Nina's webinars on walk limit or attend one of the Idea Hub webinars where we showcase walk limit for spreads. But walk limit does essentially what a savvy trader would do, and it works the order. It allows you to set a starting price, or if it's a spread, a net credit or debit for the spread, and then work the order. There are no additional charges for it, which is one of the questions that comes up all the time, especially from folks who come off another platform and are accustomed to paying cancel fees. There are no additional charges. There are no cancel fees in walk limit, and it's coming to OX Mobile towards the end of the month. So we're very excited about that.
Yeah, not to denigrate the other announcements here, but that's certainly, at least for me, and I'd imagine for the lion's share of our listeners, is the more exciting of all the announcements, because people have been writing into this show even asking for single leg walk limit. When can we get it? When can we get it? If you're someone out there who does a lot of, let's say, covered calls, or you're looking at short puts to get into stock positions or things like that, and you've been asking, hey, Where's the love for me here? I'm a single leg guy. There you go. OX has finally heard your hue and cry, and they're putting out some new tech, some new functionality for that. So that'll be interesting. I'm looking forward to having that coming out because I know I've used the spread walk limit quite a few times myself. I'd be very curious to try out the single leg. For a busy guy like me, Alex doesn't have time to babysit my orders. I want you guys at OX to do it for me. It makes it a heck of a lot easier.
Yeah, and that's one of the benefits. A lot of times people talk about, what does it cost and can I, do stuff mid-market? I think one thing people don't realize is if you are a busy trader, and I very much include myself in this, and for me, it's always expiration, which of course now is every week. And all of a sudden I've got a couple things I want to take off, a couple things I want to roll up and down or out. And all of a sudden it's an expiration Friday at 2:45 and you've got 8 orders working and you're like, oh, okay, what did I do with this? And where did the walk limit does that all for you? And it doesn't cost you anymore, which is, I think time for many people is as valuable, if not more valuable than saving a little bit on the spreads. Time can be a real precious commodity at 10 to 3 on an expiration Friday.
Now, Alex, let me ask you this. Doesn't the exchange charge Options Express a fee for the canceled orders? Or is Options Express just eating that? Or did you guys work something out with the exchanges? Or how does that work?
So on spreads, the 2 exchanges that run the most robust spread books, and there are no cancel fees on spreads.
Right, for spreads, yeah. I knew that. I'm sorry for the single legs.
No, that's okay. That's okay, because as soon as I said the most robust spread books, I recognized the problem that one of the spread books had last week, and maybe we'll talk about that. But on single leg, it's a ratio, and we just do enough business where we don't violate the ratio. So it's not much a problem. And even if we did violate the ratio in all candor, we'd eat that fee. But what the exchanges have done is it's become a ratio of orders, fills, and cancels. And obviously there's a robust enough business here that's a rare event. I suspect that, well, I can tell you that when I worked at the ISE, the cancel fee really related not to, I don't want to use punishing the member firms, but really related more to the people who were just using the network and never trading. And I think as we evolve here, all this conversation about high frequency and rig NMS, and if you didn't hear the tech talk with Blair Hall, he lights up on rig NMS. I'd encourage everybody to go to the network and listen to that. I think we're going to be evolving here, and it wouldn't surprise me if the cancel fees aren't here in 12 to 15 months under any circumstances.
I had a nice opportunity to chat with all the heads of the major exchanges and brokerage firms last week at the Options Industry Conference, and certainly seemed like in the wake of Flash Boys and all the hue and cry around HFT that of the 2 suggestions that Blair proposed on that show you mentioned there, Alex, and have been banding about the industry, he mentioned a minimum order life and a cancel fee, a universal type cancel fee. Seems like the latter has certainly a lot more industry support behind it. The former minimum order life, people can lean all over that. People don't like to have their orders stuck out there with some sort of artificial latency attached. But a cancel fee, that seems to have a little bit more legs behind it. A lot of exchanges are doing that now in various capacities anyway. So I tend to agree with you, Alex. I think the regulatory inertia is moving that way. And hopefully that won't impact things like this, because these are some of the unintended consequences that tend to suffer from regulation for all the Sturm und Drang around retail guys getting crushed by HFT. This is a good example of at least the cancel fees having unintended consequences, and hopefully not at the end of the day hurting the little guy. I guess we'll have to wait and see how that all shakes out at the end of the day. Great stuff, Mr. Alex, as always. And now it's time for us to keep on rolling right on into my personal favorite segment. Don't tell any of these guys, listeners, but it is, because it's your chance to join us here on the old All-Star panel. We're going to mix it up this week. We'll do Strategy Block on Thursday, because we're going to do some more of your listener mail. Right now, it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, and welcome to the Mail Block. As the name implies, this is your portion of the show, listeners, a chance where you guys get to sound off here and join us on the old Option Block All-Star panel. I should change the name of the show this week to the Option Pit Block, because it seems to have been hijacked by Option Pit clients this week. But c'est la vie, we love all of our listeners, no matter whose services they choose to purchase. First off, we have a comment coming from our website. The user goes by the handle KaiserDog76. I like that handle. He writes, "Love today's Option Block." This is, of course, referring to an episode we did, actually not last week, but the week before. Especially, he goes on to write, "They focus on mini options and their total failure. Mark Sebastian said it best when he talked about the people that really need a break in the market getting Bo Diddley squat when the dust settles. I have always hated minis. Talk about getting a, quote, stupid on an option trade." This sounds just like a Mark and Andrew type client. He goes on to write, 1/10 the size, but 100% the commission. I love that. That's actually my best takeaway from minis. He finishes up here, "Spreads wider than Honey Boo Boo." This product is a total joke, and in my humble opinion, never really lived. This was dead on takeoff. Well, great stuff there, Kaiser Dog. Yeah, this is another topic I had the opportunity to grill some of the heads of the exchanges on last week, in particular ISE and NYSE, because those are the two exchanges that spearheaded the launch of the minis and really helped propel them. And both of those exchanges, both those outlets, as well as the rest, really tended to agree that they were, shall we say, a bit surprised that the minis never really caught on with the retail audience. One of them even went so far as to say perhaps that maybe they overestimated the retail demand for a product like this, and they also conceded and were perhaps very much surprised by a lot of things like the commissions, like the other issues we mentioned on the show, but I think most of them were really, really concerned by the fact that the market makers never really embraced that. That really seemed to be the death knell for these products. When the spreads are that wide, you can't really, in good conscience, recommend anyone trade these things. So that, I think, was the biggest disappointment for them, and that really, and of course, now 7-for-1 with Apple, they've all pretty much admitted that that was the test bed. The primary use case for minis was the Apple Mini, and with Apple going 7-for-1, doesn't seem like there's a whole heck of a lot going on in the future of minis. In fact, they've even stopped adding new Google minis because of the screwed up nomenclature and symbology there with their split. So we'll see if those come back into the mix as well. But seems like for all the many reasons we've discussed on the show in the past, minis don't exactly have a bright future. Mr. Alex, I'm going to go out on a limb here and say you agree wholeheartedly with Mr. Kaiser Dog.
Yeah, I do. And I'd even make the point that if we here at OX and Schwab had made them zero commission, the friction still was so high. Everybody argues it's the catch-22. And, if you had customers, you'd have market makers. If you had market makers, you'd have better market quality. I'm troubled by what you just said, that the exchange heads were that out of touch. But they appear to have failed.
Yeah, that's pretty much the only way you can really sum it up at this point. So we'll have some liquidity out there for a little while going forward. Some probably catch up, cleaning up type activity, but I wouldn't expect any new minis to be listed. And someone even made the point, which is interesting, Apple now with 7-for-1 just barely qualifies at the threshold for having a mini to begin with. So don't look for many new developments in the mini space going forward. I think most people have agreed that it's a bit of a failed experiment for all of the many, many reasons. There's a lot of blame to lay at the feet of a lot of different people when it comes to the minis. So there's no one segment of the industry to blame, but still a sad development. It seemed like it was going to be an interesting product when they first announced it. All right, another one coming in from you pit folks on the optionsinsider.com. This one comes from Meatball in Training. So that's both an interesting and a bit of a scary handle, perhaps, because he's trying to be like Mark Sebastian. He writes, "Great show. The question from one of your listeners about the trade scanner that keeps popping up 2 standard deviation in the money debit spreads was very interesting. Is it perhaps the case that the scanner is ignoring the cost of carry on the premium itself when looking at prospective trades? That is the sort of thing I can imagine someone overlooking when programming a trade scanner, and for wide verticals with lots of time to expiration, it might be enough to make expensive debit spreads look superior to their synthetically equivalent credit spreads. I'm one of Mark and Andrew's students, so this is all wrong. Feel free to blame them. Great question there, Mr. Meatball in training. I haven't had a chance since that listener wrote in to actually go and check out the platform he mentioned that he found it on and play with it myself, so I can't speak with any degree of specificity about what the actual issue was, or if he just was misusing it and it actually spat out a lot of different types of strategies. You never know with these things. It could be a user error, platform error, a combination of all of the above. It could just be sometimes these things are overly complicated and it's hard to really get the trade recommendation that you want. Or it could be like the way he described it. It's just spitting out very bizarre, very bizarre and very strange debit type out of the money put spreads, which is not something you see many platforms spitting out very often. They lack that sexy cachet. I don't know, Senior Andrew, what do you have to say here for your client / compatriot / meatball in training here?
Well, the meatball in training, I think he's right that it's possible they could be discounting the cost of carry.
Stranger things have happened.
There are some, there's platforms sometimes do weird things or they forget weird things. If they're looking for, inexpensive combinations or something like that, they could easily forget the cost of carry part. So it certainly looks like the right way to think about it. I mean, I just have to look at it for 2 seconds and then I would know the answer. And I think that's probably what one of our clients did here. He's like, well, they're probably not doing that. So that would be the easiest, because let's put it this way. If you have a scanner that's throwing off 500 fantastic ideas, there's probably something wrong with it. Okay, I'm gonna disappoint everybody right now and just let them know, if you've got 500 easy ARBs with the scanner that you're looking at, it's probably not programmed right. I'm just gonna go on a limb there. But I think he's definitely going in the right direction with this. But again, without looking at the tool and what it's producing, it'd be hard for me to say, but certainly could be one of the ways.
Yeah, this is one of those ones I've seen a lot of software spit out weird stuff. This would not be the weirdest. I just saw some stuff down at the conference that keeps spitting out odd stupids, large amounts of stupids across many, many strikes. That's not exactly the type of trade you see a lot either. So there's all sorts of weird things that programmers can produce when they maybe don't pay attention to some of the fundamental mechanics of the options market. All right, last up, this one comes in from Twitter. Listener Steve Sokol, he writes, and he sends us a link to a very elaborate chart. And he asks us if is there a way to run a scan anywhere to find more stocks with this pattern? Thanks a lot for the help in the program. I'm not sure why he sent this to us, quite frankly, because we've said many times on the show in the past that we're not huge chartists here. And I'm looking at this chart. It just seems to be an underlying with a bit of a peak in price around 83 and then coming off rather aggressively. It doesn't have a lot of options connotation to it other than just the movements in the underlying. But the reason I do bring it up, though, is because, Alex, I know you guys have some interesting charting tools over there at OX. Is this something that someone could do there? Could they try to take a pattern that they've identified, maybe verbalize this pattern that they're seeing here, try to match it up with some other strategy maybe you have at OX, and then use that as a screener to, in fact, find other underlyings that are exhibiting this pattern?
So there's 2 questions there. Is there a charting tool that will allow him to customize and look for those kind of patterns? And the answer is, yeah, there is. And it's here at OX, and it's at Schwab, and it's the Recognia tool. And maybe Mike wants to talk more about it because he's probably a little better versed in it, but it does let you search for customized patterns, and you can customize it to a large degree. I'm not an expert on charting, and looking at that pattern, I don't think he's going to get lots of output. Very similar to what Andrew talked about. If you're using a tool that's giving you, 500 extraordinarily good ideas, I question the validity of the tool. But there are charting packages that will get you very close to what he's trying to do. And they exist both here at OX and at Schwab. And it's a tool called Recognia. And if the listener doesn't have an account here at Schwab, go to Recognia's site and play with it a little bit. You're going to find that's a paid site. But yeah, you can get close.
Yeah, I think to add to what you're saying on that, Alex, with Recognia, you can get close. I think another tool, I'm not sure if it's still around anymore, but are the Warden brothers still in business? Does anybody know that?
DK, don't know.
No,
Okay.
don't know.
Yeah, because I remember, I think they had a product a few years back, Telechart 2000, I remember, and you could set various numeric parameters, and it would spit out charts that would take some time to play with and program. But I just remember experimenting with that a few years back, and you could find things that would come up with what you were looking to do. I'm not sure if they're still around anymore, but I do remember that one from a few years back. And with a lot of paid services like this, if you're looking for something beyond what is at the free service, you can typically get a free trial a lot of times. And usually places like that will give you a free trial. And like I always say, if it's free, there's always the double your money back guarantee.
Yeah, if you want the free version, head on over to optionsexpress.com and kick the tires over there. And why pay for it? But if you insist on paying for it, then Recognia is Recognia. So look for recognia.com, and you can surf on over there and check it out and get a demo and see if that meets your needs, Mr. Steve. All right, that's going to do it for the mail block for this episode. Now we're going to keep on rolling right on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is, of course, our final segment where we break down what we're watching for the rest of this week here. And it is getting late in the cycle, but there still are quite a few earnings to be announced. We have my old favorite, Activision. Haven't been too active in there the last few months, but this one was, like I've said many times in the past, was such a great premium seller. Now it's been moving quite a bit, so a little bit of a different beast. Have to take a second look at it. Maybe that old bullish risk reversal like Uncle Mike likes to use, and Apple could be a good play out here these days. I've done that out there in the past, and it's worked pretty well. Taking it out a bit on the chin today, down about 50 cents, but they're trading around 19.5 right now. They have earnings tomorrow after the close, so it's moved quite a bit out of that 10 to 11 range it was stuck in for the better part of well over a year. So interesting stuff to watch if you want a decent mover coming into earnings. May not be a bad one to keep an eye on. Of course, sticking to our neck of the woods here in the options realm, we have the CBOE coming out tomorrow before the open. Again, that's before the open, so hopefully you got all your trades off there. CBOE is still a pretty light one from a volume perspective, only doing about 2,200 contracts a day, doing 2,500 today going into earnings. So CBOE still not lighting up the tape from an options perspective, which is a little bit interesting and perhaps a bit meta as well. We also have Disney coming in tomorrow after the close, and quite a few others lurking on the path. We have Electronic Arts, the counterpoint. So if you like Activision, you probably like Electronic Arts, also coming out on the 6th after the close, and a name we've all loved to beat up on for quite a while, Groupon, coming in tomorrow after the close as well. So it's not done yet, listeners. Still quite a few names to keep an eye on, and quite a few options active names, CBOE aside, to keep an eye on. Mr. Tusaw, we'll start with you. What are you watching for the rest of this week?
Apple 600. Want to see if we can continue past there, and also just watching the S&P in general. Want to see if we can make some new highs. We're pretty close to it right now, and I've said this before at least once on the show. There's never, if we do make new highs, which we might, if we get a few more handles up there, there will have never been a better time in the history of the entire stock market to sell any S&P 500 positions with which you have. So I think I'm bullish. I think the market's going to continue to go higher if we do make new highs. But keep in mind, risk management is what keeps you around.
A couple others I neglected to mention. Of course, Tesla, the big OX name on the 7th after the close, and Priceline, another big OX heavy name, big options heavy name, coming out on the 8th. Unfortunately, before the open, so we won't have a chance to discuss it live here on the Thursday episode. Mr. Alex, what are you watching for the rest of this week, sir?
I agree with both you and Mike. We've covered earnings, and that's you know, I think that's baked into the market right here, maybe with the exception of Disney. The 10-year broke the 260 level today, traded in the 2.5s, very high 2.5s. I continue to be perplexed at what's going on with rates, but you know, rates are much lower than I would have bet they would have been. Volume got a little light today, which means didn't see a lot of fear, didn't see a lot of hedging. So geopolitical stuff, the Ukraine, Crimea, they're clearly starting to slug it out there, and the market seems not to care. And I don't know if it's a not to care at this point or not to care yet. If that expands or explodes anymore, the market will care. But just looking at macro stuff, looking at the 10-year. Not a lot of vol in the German or the UK 10-year. That's been the window into the Ukraine, and those things were really quiet today. So that's what I'm looking at.
Mr. Andrew, take us home, sir. What are you watching for the rest of this week?
Watching volatility. I'm watching to see if some of these tech stocks, it feels like they're kind of dead in the water. I mean, they're bouncing a little bit, but for the whole sector, I mean, somehow the Qs are sort of managing to try to get back up to those higher levels, probably mostly on the strength of Apple, because it's not getting any help from Google. Microsoft is stalled. So a lot of them they're kind of sitting around, and everybody's kind of been coming back to the all Apple market. So there's probably some opportunity there. And like I would say, some of the marquee names, I mean, you can get Google for a level that you haven't seen really in 6 months. So, eventually if Apple does, let's say, trade 600, if the S&P 500 does kind of break into new highs, I think some of the better tech names that have gotten shellacked are going to be, I think they're going to start to generate a little more interest again. But for the most part, it's just kind of, managing risk and having a little long theta and, not expecting too much. I mean, I think I kind of like some of those go-go moves we had last year. I mean, obviously the market could drop at any time, but it feels like there's less of a lot of that like hard upward momentum, and it's more of a slog at this point for trying to generate any kind of dollars.
Well, hopefully this show wasn't a slog for you listeners. And before we go, let me check in with each of my cohorts here, my partners in crime on the old All-Star panel, to see what they have cooking that may interest you until the next time we all get to gather around here by the old campfire. Starting off with you, Mr. Andrew. What's coming down the pike at the pit?
You would be surprised, but I actually have something going on at Option Pit. Know what it is?
Who are you, and what have you done with Andrew Giovinazzi?
He has been taken and hidden in a closet somewhere. No, on the 7th, I believe it is 2 days away, we will be having the Why You Need to Take the Gold course free webinar at 5:30 Eastern time. Basically, we outline what the course does. Actually, we've gotten a lot of really good reviews on it. It was our gold course that we recorded into digestible bits that people can download and play on their phones by the magic of, Vimeo service. So we re-recorded everything. And of course, that comes with live instruction too. But the content is now easily accessible. And it is about 100 and, wow, how much? Geez, it's an hour and a half. It's about 15 hours of content, not including all of the live stuff we do every week, which is about another 5 to 6 hours of education. So it's a let's like our clients say, it's kind of like drinking water out of a fire hose type course, where we really try to hit what we think are all some of the key basics for people just introducing themselves to options, albeit at a relatively intermediate, it's a pretty much, I would say, intermediate to advanced level. But the why you need to take that course and what you get out of it will be on May 7th at 5:30 p.m. Eastern time. I think the webinar is already full. Our free webinar, we only get about 200 per webinar. They fill up, usually all fill up. If you're shut out of the webinar, we will always send you the link. So make sure that you just, send us an email and we'll be happy to get you the link for the webinar. So if you can't make the live one, we'll always send you the link to the recording.
Great stuff, sir. You may now go back to the closet from which you were trapped. Meanwhile,
I feel better now. I feel whole.
We shall keep on rolling. Uncle Mike, what's coming down the pike over at the webinar train?
Tuesday afternoon, May 6th, I'll be talking about the strengths and weaknesses of weekly options. Excited about that? Sign up today.
And I guess you've gone ahead and canceled that mini option seminar.
Yeah, for now.
Tabled indefinitely. All right.
10 times the commissions and 1/10 the fund.
Yeah, I love that. Actually was a pretty good way to sum them up. I like that. All right. And last but certainly not least, Mr. Viceroy, take us home, sir. What's coming down the pike over at OX Education?
So 2 live events in May. May 10th, New York City Midtown. That's a Saturday. Jimmy Rosanna and the crew will be there with their, it's about a 6-hour event, but if you can't make it, you can see the event simulcast on the site. Come to optionsexpress.com to register for that event. May 31st, sneaking into May, because Jimmy normally does about one a month, but May 31st, he will be in Philadelphia doing the same event. And again, if you can't make that event, or you make the May 10th and you find it so fascinating, you want to experience it again, you can come to the site, and those are simulcast. One webinar of note, and we talked a little bit about charting and technical analysis. Dan Gramza from the CME is going to be doing what I think is a particularly interesting topic, because most webinars and events are how to do things right. Dan's going to do 5 common mistakes that technical traders make. That's Wednesday, May 7th. It's in the afternoon. Just come to the site, optionsexpress.com. All the events are free. You don't need an account. All the education material is ahead of the login, so you can see it all. But Dan's a really interesting guy. I sometimes know when I say that people are saying he's just hyping it. Dan and I have done a number of presentations together when I was in the exchange community, and sometimes we do stuff simultaneously, and then we kind of arm wrestle afterwards as to who had the bigger crowd, and Dan almost always won. So he's an interesting guy. May 7th with Dan.
Great. Thank you for that, Mr. Viceroy. And of course, on behalf of Alex and Uncle Mike and the Rock Lobster and myself, I want to thank all of you out there in the listening audience for downloading and streaming and for subscribing to the show. And of course, for writing in with such great questions. Even all of you Option Pit listeners, you guys are free to write in too. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.